In this presentation, we will continue on with our comprehensive problem to the transaction happening on January 22nd, where we perform work for cash. For more accounting information and accounting courses, visit our website at accountinginstruction.info. In other words, this is going to be a transaction where we do work, we do whatever it is we do as a business, and receive cash at the same point in time. You can think of this as a typical type of transaction for, like, say if we serve meals, if we're a restaurant or something like that. Typically payment happens pretty much at the same point in time that the activity happens. So in order to do that, we'll go through our questions. First question is cash affected? Yes, we're going to receive payment. Cash has a debit balance. We're going to make it go up by doing the same thing to it. Another debit. So within L5, I'm going to right click and copy. We're going to copy the cash, and then we're going to put that in H11, right click and paste 1, 2, 3, those values only. And then the amount that we're going to have here on the debit, the increase to cash, was 15,000. It's a nice job. All right. And then we are going to credit something. I'm going to put the credit over here. It's going to be a negative of that number. You could just put a negative 15,000. I like to use formulas whenever possible and encourage others to do so as well. What's going to be that credit account that we will need? That's going to be I usually ask, why are people paying us money? Because we earned something. We did something of value, which they are willing to pay us for. And therefore, we're going to credit revenue. That's what revenue is. So we record revenue when we earn it in accordance with the revenue recognition principle. Note that revenue has a credit balance, which is a good thing. Credits go up, and we like the credit in this case, as opposed to like liabilities, which are also credit balance accounts, but are kind of bad up here. So on the income statement, credits are typically the accounts we like, credit balance accounts. And so it's going to go up. We're going to do the same thing to it, which in this case is another credit. So I'm going to right click and copy the revenue or income. We're going to put that over here in H12, right click and paste 1, 2, 3. We're going to increase the indenting by going to the Home tab, the Alignment group, and increase the indenting, which is probably already done on your worksheet. That is the journal entry that has been journalized in the General Journal, and we are now going to go through the process of posting that to the General Ledger. To do so, we're going to freeze the panes to make it a bit easier, hopefully, and we're going to go to the right just a little bit so we can see G column flush to the side. Then we're going to go to cell H1, make sure you're in cell H1, go into the View tab, go into the Windows group, the Freeze Pane section of the Windows group, and freeze the pane. Now the first one, we don't even really need a frozen pane because it's cash, and cash is right there on top. It's our favorite account, first account, and favorite first account on the General Ledger as well. If we're going to scroll down to the next area where we can post cash, we're on the debit side. We're on the debit side here. So we are in O15 where we will say equals, point to that 15,000, increasing the 30,000 balance by 15,000 to 45,000. That then appearing as well on the trial balance and putting us out of balance by the 15. The other side then in revenue or expense, it's going to be the first income statement account. It's in order, assets, liability, equity, and then income and expenses. We're on the first income statement account. It's going to be in the same order on the General Ledger. This is where the frozen panes come into play. We're going to go to the right. We see the cash accounts, and then the liabilities, and then equity, and then the revenue and expenses. So we're going to scroll down to revenue and expenses is down here. And so here we have it. Notice it always goes up in the credit direction because income statement accounts typically only go in one direction, and they go up. Revenue going up with a credit, expenses going up with debits. We are in cell AF28 where we will say equals. Scroll up just a bit and point to the 15,000 credit and enter. So there we have it. 27,000 went up from 12 by 15 to 27. I'm going to scroll just to the left of the panes here and go right so that we can then see the 27,000 is increasing to revenue. So if we scroll back up, we can analyze what happened. We've got cash going up. We've got revenue going up. So here, of course, the cash is increasing and the other side being revenue increasing at the same point in time, not because we got the cash, that not being what drives revenue. What does drive revenue is the fact that we did the work at this time, earned the revenue under the revenue recognition principle, and therefore increased both revenue and net income. Note that at any given time, we can see that the assets minus the liabilities will equal whatever it equals, in this case 127, which will equal the equity section, which is all the blue, 127 versus debits versus credits. And then that's what our accounting equation is representing as, where assets equal liabilities plus equity. For more accounting information and accounting courses, visit our website at accountinginstruction.info.